Hey everybody, welcome to this channel. Today we want to talk about where rich people invest their money in 2022. Make sure to watch until the end, because it's one of the most amazing hacks you have ever seen. Please, subscribe and turn on notifications so you don't miss more videos and much more. Throughout history, gold and real estate have been the two most reliable investments. Landlords were always the elites of the society, and owning a piece of real estate was like a dream for many people. Even today, prices have increased so much that owning a home seems unreal. However, in the last few centuries, the financial system has developed so much that it presents an alternative way to grow wealth. Warren Buffett is living proof that with smart long-term investments in the stock market you can do pretty good. Here in this script we will explore which one is a better investment. Do rich people is real estate is still a good investment as it was in the past, or the stock market is a superior alternative in the 21st century? There is a huge debate around it. Real estate investors declare that real estate is the best investment ever, but stock market guys claim the opposite. Both of them are right to a certain degree. The truth is somewhere in the middle, but to find out where exactly we have to take an in-depth look into each of them. We should begin with the way that land is costly regardless of where you are. Individuals frequently work a whole life just to claim one property. That was the situation with your folks. Presumably to make solitary land speculation you want a ton of reserve funds. Then again, you can begin putting resources into the securities exchange with just $5. It relies upon the stock. However, most organizations, even extraordinary organizations, for example, Apple, are exchanged at around $300 for every offer. You can turn into a financial backer in perhaps the biggest organization on the planet with only $200 or $300. But the cost doesn't stop there. It's no longer like the old days where you have to pay a broker. With apps like Robinhood you can purchase stocks for absolutely free, but when it comes to real estate the transaction fee is quite expensive. That doesn't necessarily mean the stock market is better. Risks that come with the stock market are much costly. It's difficult to analyze the market and individual stocks. In particular, we might be at the peak of expansion period where the whole market is overvalued and your investment will probably fall by 20, 30, or 40% if you don't cash out right before the market crashes. If anything, history taught us that nothing is too big to fail. For instance, Apple is a big company, so was Nokia. Once upon a time Apple was so far once on the brink of bankruptcy. Stock prices change every day for different reasons that can trigger an emotional response and push you to exit the market at a loss, which is what happens quite often even with professional investors. But with real estate, it isn't like that. As large as it's in the city, the land beneath it will always be treasures. And even during problems they often restore their value pretty easily. Since everyone required a roof over their heads, real estate covers one of our most important needs. When you buy a property you can sleep well and be assured that you are not going to wake up the next morning with the news that your property lost half of its value. What also builds real estate attractive is that it gives passive income. With rent prices increase you don't even require to work. It's one of the few investments that can give you a strong stable income that has a dividend yield of 7, 8, or even 10%, whereas it's extremely rare for any company to pay a dividend yield of 5% or more. Some companies pay, of course, but they are risky stocks where you might lose much more by the drop of the price than you can make out of dividends. But it also works the other way around. Real estate doesn't appreciate as huge as the stock market. In 2019 on average home prices appreciated by 3.8%, while the S&P 500 was up to 28%, which is almost 10 times more in the past decade. Amazon had a total rate of the back of 1,209%, or Netflix had 3 times that number at 3,767%. You will never discover such returns in the real estate world, because in the stock market companies constantly develop to stay ahead of everyone else. In 25 years Amazon built from nothing to over $1 trillion company. To emerge that abundance you want to sell that stock where you need to pay a capital increase charge, which is 20% for long-haul ventures, and can go as high as 37% for momentary exchanges. With land there are different ways of keeping away from expenses, and utilize that money to develop your abundance. For example, as opposed to paying for the whole property forthright, you can deduct the part of your home loans owing to revenue installments on your assessment forms. You can recuperate the expense of pay. Creating investment property through devaluation cost regularly brings about an overall deficit on venture property regardless of whether the property fabricate positive income. This misfortune, just as costs such as utilities and insurance decrease from ordinary income. Even if you end up selling the house, you can avoid paying capital gain tax. If you purchase another property, tax benefits are quite decent in real estate, but of course, it's not all sunshine and rainbows. Unlike stocks where you can read the financial statements of the company, do some research about the company and determine whether it's worth your money or not. Real estate needs much more work. To observe one to be appropriately investment property, you may require weeks, assuming not months. That is simply an aspect of it. Once you begin leasing it out, you will run over entire various kinds of difficulties. For example, observing good occupants who can continue to pay the lease and would deal with the house, continually needs some upkeep, something consistently breaks and should be supplanted. All that will happen, extra expense and costs. That likewise implies it very well may be hard for you to move to an alternate city or a country because your property may require you there constantly. 2. Financial exchange, endless opportunities. What I like with regards to the securities exchange is that it can show you more about the business world than your four-year college education could at any point in all actuality do. Each time you examine an organization before tossing your green dollars into it, you need to peruse its budget summaries, comprehend its income, concentrate on its past to have better lucidity about its future choices, improve its items and their deals. On top of that, you need to see profoundly how the financial machine functions, the job of banks in the monetary cycles, etc. So to begin a business, that information will be the foundation of your startup. Yet the securities exchange isn't just with regards to trading stocks. The monetary framework is mind-boggling that there are more ways of bringing in cash in the securities exchange than a great many people know. For example, shorting, where you sell a stock when it's high and repurchase it when it's low. Sounds confounded. Assuming you ace the financial exchange, the entryway of chances will be opened before you. Regardless of whether you have the opportunity to do all of that, you can keep your reserve funds in record finance and be certain that over the long haul, you can expect a 10% return. 3. Influence, when you purchase a stock. It's simply a computerized archive on the screen of your cell phone. You nearly have zero commands over it, since your single stock won't give you much impact. When the organization has another 5 billion stocks through land, gives you full oversight over your venture. You can contact it, feel and control it. Other than the automated revenue it can give, as we have talked about before, you can utilize influence. Suppose you have $25,000. Putting $25,000 into protections purchases $25,000 in esteem. Then again, a similar interest in land could purchase $125,000 in property with a home loan and assessment deductible premium. 4. Where should rich individuals contribute? The response is, it depends. If you are enthused about easy revenue, then the land is your decision anyway. To focus on more significant yields, the financial exchange is without a doubt a superior choice for yourself and rich individuals, particularly assuming rich is a beginner financial backer with minimal expenditure to begin. Yet you ought to likewise consider is the thing that you view as fascinating. Assuming you think that it is too exhausting investigating organizations and going through interminable desk work, then, at that point, possibly it's only not for your factors. For example, the spot you live. Additionally, assume a part might be in your city or even a country. Things are unique, so you need to make your inference dependent on your conditions. That is it for this video. To help our channel, look at our Patterson. Other than that, simply give this video a thumb up and buy in, assuming you are new around here. Thank you for watching this video. Please subscribe and like our video to support us. And turn on notifications so you don't miss more videos. See you at the next video.